Yo, what's going on, guys? It's Chase. So today I'm going to show you a little bit about the ES trading session today, some of the trades I took. We'll talk about some future things, and I know some of you guys wanted the education covered on this post right here from Twitter. It was all about market structure, basically market structure break trade, and I actually took one of these market structure break trades today on ES. I'm going to show it to you guys, and hopefully that'll reduce some of the confusion about the whole market structure thing, because this post really got a lot of traction in terms of questions and DMs and whatnot. So, well, why this high and why not this high? Why not this high? Why not this high? So let's cover all that real quick. First thing we'll do, let's go into ES, and let's just we as usual we start on the weekly, right? Okay, so we can see this obvious low right here, weekly liquidity. I ultimately think that this is a target sooner than later, keeping an eye on that on the upside. Now, this is just for the high time frame, right? The point of starting at the high time frame is to develop context, all right? So we want to develop context, and when you develop context, that's when you're going to be able to better, have a higher hit rate with your lower time frame trades. Because if the market's up only and you're using your setups, but you keep going short with your setups, most likely you're going to get stopped out a lot. You really want to be trading in the direction of the market, okay? So we're just starting here on the daily chart, and we can see we have a weekly level here. If you go to the weekly chart, you can see a weekly low here, even though we were on the daily, okay? And then we have a daily inefficiency, gap, void, whatever you want to call it right here. Typically these fill. Also, we have the confluence of all this prior demand right here. So support, 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 rejection, and then we also have the gap fill. So multiple levels of confluence right here to get back up to here eventually. And then we have this obvious, very obvious low, right? People always ask me, how do you spot liquidity? Guys, you spot it with your eyes. Look, where are the obvious lows? You have an obvious low here, you have an obvious low here, and look what happened every time you tagged an obvious low. You swept the low, you bounced. You swept the low, you bounced. You sweep this low, probably gonna bounce. All right, it's not like some type of magic in identifying liquidity. Just use your eyes and think, okay, where is the ordinary, quote unquote retail? Where's the ordinary quote unquote retail? I put it in quotes because obviously I'm a retail trader too, but where is the typical, let's not be mean, but let's just say dumb. Where's the dumb retail trader going to put their stops? Below these obvious lows, below these obvious lows, below these obvious lows. Okay, 1 second. So now let's go down to the lower time frames, and we'll look at today's session. Before we look at today's session, I want to do this. This was the liquidity here, and this was the liquidity here, and I just wanted to see where we were working with today to just show you guys when you break down to a lower time frame. So when you break down to a lower time frame, you're going to see that a lot of these levels also have confluence in different ways. Or we can see, I believe this was Monday, right? Let's see, yeah. So this was Monday. So now we have Monday's low right here, okay? So Monday's low. Okay, let's just mark that ML real quick. So we have Monday's low right here, and then we had this liquidity right here. And just look at how, you get good confluence in this level. You had, your sweep here, your bounce, you retest the liquidity, and then when you come up here, you actually push into Monday's low. So sometimes you want to look for recency. I wouldn't say sometimes. Typically, you want to look at more recent relevant data. So if a liquidity level all of a sudden, to the right of the chart, right? We typically want to work from the right to the left when we're talking about lower time frame trading. If we're talking about higher time frame trading, then we typically want to, mark out a major level on the left, and that can give us like an easy sweep, right? So we're just trading daily chart. If we're just trading daily chart, okay, here's the low, we sweep the low, we get a good rally. Okay, but now if we're trading lower time frame, we want to use something that is more recent. Okay, so we'll take Monday's low, and it has good confluence with this liquidity level here. Let's just get rid of it for now. And you're going to see what I mean here too. Liquidity level, okay? So go back to the daily, I'm going to show you. I know this is a little scatterbrained, but I'm trying to explain it. It's hard to explain some of this stuff, man. So daily here, right? And then look, we go to the lower time frame. Look at what we get today. We get a sweep on liquidity. Now, use local level. Okay, the local level is now providing a better sense of the market after the older level was utilized, so to say. So we utilized the old liquidity level, and then we moved into this Monday's low, what the market gave us for short-term, lower time frame trading this week. Okay, we had liquidity level here, and then we mark out the new low as a potential opportunity where we know stops may be sitting. Okay, and then we'll do the same thing with the weekly liquidity. If we eventually tag this, most likely on the first attempt, it's going to be a stop run, and we should be able to bid that and push up for at least a decent bounce. And then as the week develops, we'll have to see, what type of price action develops, but maybe a different low is put in, like a low is put in down here, and then that we're going to just move our level to there for short-term, lower time frame trading. Okay. All right, so that's the hard part out of the way. Really, I think that's one of the. I can see why it's confusing because I have a hard time explaining it. How to break down from higher time frames to lower time frames, but people will say, "Oh, but this high time frame level is not being respected." It is being respected. It's just being maneuvered around. It's not perfect anymore because it's been used, but there's now new data around those levels that can give you an indication of what's going to happen on the lower time frames. Okay, so now let's start marking this out. So we marked out a low. We're going to mark out a high here. Now this is before today's trading session, and again here we're on ES, and we're going to talk about the Bitcoin trade as well. Okay, but for now here we're on ES. And as usual, guys, if you appreciate the videos, please go back, like, and retweet the tweet. And also, my links will be at the bottom if you want to trade ES, sign up for Prime XBT, deposit. Even if you deposit a very small amount, it's very helpful to me. That's what keeps these videos and this education coming. So if you like all this, like I said, support the tweets, sign up on Prime, etc. Okay, so before today's session starts, I'm looking to the left, recent data. And I'm saying, okay, well, we have some highs over here, and we have some local highs in here all built up overnight. Okay, ultimately, I want to see these highs ran first. If it continued to run, then I'd be looking here. But you guys know the deal, right? If we opened, and on market open, if we pushed up in, and we got a rejection, remember, we're looking for some type of an impulse move down, and then retracement back up. That's typically where you'll find your short opportunity. Okay. Instead, we just put in more equal highs. Okay, so this is obviously where I'm looking for price to go next, just lots of highs after we ran this liquidity. Okay, so this liquidity is ran, and this liquidity should be next. Okay, that's my thought process. But now let's break down, and I'll show you guys the trade from today. Go down to the 5-minute. Just trying to get today's trading session. I want to delete lines that aren't utilized to try to clean this up. Okay. Today's trading session starts in the gray box, right? I have it labeled out in the grays. So we go up, we do not tag liquidity, but what do? We come over and we tag this liquidity. Now here's one of my favorite setups. One of my favorite setups is when you have a liquidity level, okay? So here is a low, right? And what happens is you're coming down into the low, and we've talked about this in previous videos. I say, don't just long the stop run, because you could, continue to make lows and whatnot, and then eventually when you get that pump, that's when you'll look on the market structure break. Okay, that's when you look to enter. And we got that pretty perfectly today. Let's break down here. Let's go all the way down to the 1 minute. So we're coming down towards liquidity. That's our context, right? We're coming down towards liquidity. We want to get long. How do we get long? Well, we're looking for the sweep of liquidity and then a market structure break. Okay? What do we have here? Let's just take a look. We have a low. We have a high. We have a lower low. We have a lower high. We have a lower low. We have a lower high. We have a lower low. And then we break right here. Okay? That's our market structure break. We're using the high of the previous low, okay, before the lower low. And then you have to have the market structure break as well. It has to push through. Because what could have happened here is that we could have just put in this, and then we could have went lower, okay? And then what it would have changed to is you would have used this high right here from this low, and then when it broke through, that would have been your market structure break right there for the retest, okay? So market structure can be difficult to explain, and I think a lot of people are confused with it, and some people probably even do it differently than me, but I'm showing you what works for me, and what works for me is making sure that market structure has actually broke, because people think, oh, what about this low right here and this high right here, or this low right here and this high right here? Okay, but what if you put in this high, because you could see how that flips to support, right? Cool. But what if you put in this high and it just goes lower? Then you don't have a market structure break. You have to use the previous low's high before the lower low. The previous low's high, okay? The previous low's high before the lower low. Let's go over to BTC. I don't have I need that tool that SC has, but I'm just going to use my mouse for now. You can see my mouse, right? You can definitely see my mouse. Okay, yep, just had to confirm that you can see my mouse. All right, so remember how we were looking at ES and we said the high of the previous low? Okay, then you have the lower low, then you break market structure. And let's go over to here. You have low, you have high, you have low, you have high, you have lower low, and you have the break of market structure, or candle 2 could have been breaking market structure, either way, okay? So what do we have? We have the high of the previous low before the lower low, okay? Go over to ES. The high of the previous low before the lower low. Go back to BTC. The high of the previous low before the lower low. Market structure break. Market structure break. Okay? And then what do we get on ES? Now, this is why I'm a big fan of ES, because look at how perfectly clean it traded. Wow. Market structure break taps perfectly. On BTC, I had to take a stop out first and then re-enter. If you saw me, I said that in the comments somewhere. So you get a market structure break. I longed the retest. It proved to be a deviation. And especially with all these funds, just so you guys know, with all these funds getting liquidated and everything, in my opinion, BTC price action, especially on the lower time frames, and even over the past couple months as prices have gone lower, the lower time frame price action is more subject to players being able to move it in which way they want. In my opinion, it's more subject to just a less efficient, less clean market, which is why I've moved over to trading ES more often. Look, these are the same exact setups, guys. Same exact setups. A low, a high, a lower low, a break in market structure, and then the retest, right? But unfortunately, you get this little scam here on Bitcoin, so I get stopped out, and then it reclaims, and then I long it again, target liquidity, okay? ES, we have our low, we have our high, we have our lower low. Where's our break at market structure? It's from the previous low's high, okay? So we break market structure, we get a perfect retest, basically to the pip, okay? And then on BTC, we targeted just an obvious liquidity level. Look, we just have this high here, up move before the down move, and we have a high on it. On ES, I targeted, for target, I did head up to a higher time frame. I believe I targeted this high right here, just off this this down move, because we had a strong velocity, impulsive move down, right? Typically, your origin of impulse is where you're going to find a level of resistance. You guys have heard that term before. And then there you go. See what it's doing now. All right, we're moving up a little bit. I have something open right now, so I'm just monitoring that. Okay, so I think that is a good explanation of how the market structure works, and then bidding the market structure break And targeting is, it's simple. Just target resistance or target liquidity or target an origin of impulse down. Move up a little bit, right? Because look at where the liquidity was taken. Liquidity was taken on, a 30-minute, a 1 hour, probably even a 4-hour time frame. We can target a higher level. To be honest, I probably could have just targeted liquidity to liquidity. Probably could have done that. It's just market has been, and now we're getting back to context, market has been downtrending and it's been fairly bearish, right? So I didn't want to, bearish, right? I didn't want to give back, my gains there on a strong move right there in case we rejected off here and just kept moving down, like we did some of these other days where we just rejected and we kept moving down. So I took profits quickly, and that was the plan. Okay, so we did market structure break. I'll show you guys the trade that I'm currently in, and we'll see if it comes to fruition. So get up to the 5-minute. So after I took profit on this short, okay, took profit, right? That was the 15-minute impulse down. There it is. Okay, we came down for the lunch session. Usually lunch pretty consolidative, right? We can just see some obvious consolidation in here, right? It doesn't take a genius to mark it out. Consolidation and consolidation. Okay, all this consolidation in here. So I was figuring that if we got a strong impulse move that broke us out in one way, I would bid the retest. Okay, so here's what we got. We got a strong impulse move upwards. And where would you bid here? Where was the previous demand level? In my opinion, it's right here. Resistance before you break upwards. Okay? So resistance, resistance, plow through resistance, support. And I wouldn't be surprised, because remember, we still have all these equal highs up here, and they, in my opinion, they need to be run. That's my target right now, and I still have not reached my target. I would not be surprised if they come down and sweep this and then go. That's possible. You're trying to scare the people who took this opening position. But as long as basically, I wouldn't want to see it close into here, right? If it's closing down here, that, in my opinion, that's acceptance back into the level, and that's not what we want to see. What we want to see is quick moves off the level. So if this comes down, hits it real quick, sweeps this, I'm fine with that, but I want a fairly quick move off the level. It can play around on the top of the level, but I don't want it to play around inside of the level. Okay, if it's playing around inside of the level, I'll probably cut it, and that's that. Okay, so those are my two trades for today. I had the market structure trade, and now I'm currently in this one targeting this liquidity. I think, we took this liquidity. I think this one's up next. We had bullish break in market structure. We had long consolidation. We get a breakout out of the long consolidation. We retest it perfectly, almost maybe even a little too perfectly, which is why I think they may sweep it, and then force everyone out of the position who got in here, force people out who got in here, and then run it right to there. Okay, so that's what I'm currently looking at. We covered this on BTC. We covered this on ES. If we just look at BTC right now, we've just been hovering, bouncing ball basically on the level, right? So we had the deviation here, and ever since then it's been support, 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 and now we're breaking down below. I don't know. I'm not really watching BTC at the moment. I'm not going to be in the I don't think there's much of a win. There's not like a win condition right now on BTC. Like what? I'm going to get short into 20K? That doesn't make sense to me. If it breaks down, if it eventually breaks down, sure, I'm sure it's going to give a nice move down. But I don't know. Maybe it sweeps 20. It just, maybe it slips like $600 or something, and it reclaims, and we get a spring, and that's when we move upwards. Otherwise, I don't want to short into 20K, and I also don't want to long an asset that literally just hovers on support in a completely anemic. It feels like an anemic environment, right? Like FOMC came to a close. All we've had is selling, and yet like, you can't get anything out of this. Like, you can't, you don't even get any stop runs. Like, where's like the stop runs that we used to get? Like, at least run some liquidity so I can get short. You can't get anything out of this market right now, in my opinion. And of course, don't get me wrong. There's going to be plenty of people who are probably still crushing this market, crushing this consolidation. Trading is very personal preference, all right. And as you could tell, you have to have a pretty strong bias about how you feel, and you have to pretty much speak and be confident in yourself. And right now, I just know that this isn't my environment over here. And when you're getting just amazingly clean action, market structure breaks that are tagging to the pip, demand levels that are tagging to the pip, sweeps. Look, sweep, tag to the pip, market structure break to the pip, demand before move up to the pip. I mean, who the fuck would be over here trading whatever this garbage is on I don't know, when you could be over here trading this, how clean it is. I don't know, guys. Just personal preference. It's just what I'm doing at the moment. I know that there's going to be a lot of people, and don't worry, guys. These concepts that I'm teaching you, they can still be utilized, right? I drew it for you, right? You have a swing low. You're coming down into the swing low. Currently bearish market structure. You have the low before the lower low, and you take the high of that, and when you break through, that's your market structure break. That's your retest buy right there, and you go. I mean, these concepts can work anywhere. It doesn't have to be exclusive to ES. I'm just using ES. Also, this is SP 500 on Prime XBT. If you want to trade on there, you could use USDT, USDC, BTC, ETH, anything as collateral. I'm just teaching this because the price action is just printing way cleaner, and frankly, I've been doing very well on it, and I figured it's worth sharing, something that is actually working well in this market while, people are trying to figure out, is the local bottom in on crypto while 3AC is capitulating? Are all these on-chain liquidations going to go through? Like, who the fuck knows, what the charts even mean right now in crypto, in my opinion? Because all I see on Twitter is people talking about 3AC this, Celsius this. These people have 200 million worth of liquidations at $900. Oh no, they moved their liquidation price down to $800. Like, I don't know. It just seems like the space is almost too small and inefficient right now to have a good read and to be able to properly trade the chart. And if you're talking about a liquid market, S&P E-mini futures is essentially, I believe it's the most liquid market in the world, the S&P 500. So I'll leave it at that, as usual. Appreciate you guys. Please, the tweets, the signups, everything you can do. Any questions, you can leave them in the Twitter comments, YouTube comments, whatever. Thank you, and I will catch you guys next time. Peace out.